Good evening, everybody. This is James coming to you from Dividend Stock Talk. Today is July 27th. It is 10 p.m. It is Thursday, July 27th. And we are talking about... Oh, this is not good. What am I looking at here? Okay, so let's go back to here where we were. Where were we? Interesting. So I'm getting feedback. All right. That's lovely. So I'm getting feedback. I'm taking that off because I'm getting feedback in my own head, trying to figure out what I'm trying to say. All right, let's go back to where we were. As I was saying, it is 10 p.m. Thursday, July 27th. Here at Dividend Stock Talk, we like to talk about dividend stocks that are getting ready to pay out a dividend so we can take advantage of them and collect a dividend, move on, and not have to worry about what we're worried about. I don't know what that means. I'm getting this feedback and it's driving me nuts. Okay. So, that's better. Get rid of that feedback, so hopefully everything's working fine now. Oh, okay. So Dividend Stock Talk, where we talk about dividend stocks and investing to gain cash flow from our investments. That's basically what we're looking for. Now, I could tell you about buying dividend stocks and just holding on to them and collecting the dividends, but that is so boring. Buy it, collect a dividend, and just hold on to it forever. Oh, how boring that is. Nope, that's not what I do here. I like to buy a stock, collect a dividend, sell it for a small profit, and then go out and buy another one. I like to keep the money churning, keep it running, keep it rolling. This way I need less money to retire. Okay, so basically they say you need, nowadays, a couple of $1 million before you can retire. Now, most professional investor, money managers tell you that you can draw 4% of your money every year and live comfortably. Great, if you get a couple of $1 million. How about those people who don't have millions, only have a couple $100,000, maybe even $50,000 or $60,000, and want to try to retire? How are you going to do that? Can you do that with traditional investing? No, you can't, because it's just not enough money. I mean, can you really retire with 2 or 3% return from the dividends that you're collecting? Well, you could if you had millions, but if you have hundreds of thousands, you can't do that. Now, if you use this strategy, it's called dividend capturing, where you buy the stock, collect the dividend, sell it a couple of days later for a small profit, and then buy another dividend stock. This way you're collecting 10 to 20 checks per month. If you want to scale it back a little bit, great. Get 2 or 3 checks per month. And think about it. 1% a month, that's 12% a year. Now, 1% of $100,000 is only $1,000. Can you really live off $1,000? No. So you're going to need a couple $100,000 in order to do that. It's better off than a couple of million. It's a heck of a lot easier to obtain. It's easier to get 100,000 than it is to get $1 million. All right. So let's say hypothetically you can gain 1% per month or 2% per month. Great. That means you need less money to retire on, depending on how you want to retire, of course. So let's forget all that and just jump right on into our investments. Now, yesterday, I had a latecomer coming to the game and asked a question about a certain stock, PETS, or Pet Meds. Let's quickly take a look at Pet Meds. Or do you want to take a look at what we bought today first? Let's answer the question first. All right, Pet Meds started the year off at 20 bucks. Basically traded sideways for 3 months, did absolutely nothing. right around election time, she made a low of the year of $18. Okay, so she's $18 right around election. After the election, she jumps up to 22. Okay, she goes from 20 to 22. What's the big deal? There's no big deal there. She goes sideways for a couple of months at 22, drops back down to the $20 area, goes sideways for a couple of months, drops down, hits another low of 19, goes sideways again for a little bit, and then going into April, she's at 21 and slowly jumps up to 23 right around the beginning of May. Now, something happened in May with pet meds to go from 23 and just keep on going up. Keeps on going up, and then eventually it hits 41 and goes sideways for a little bit. Now, this thing was at $20 at the beginning of the year. Now she's at 40. Okay, now she has a good earnings coming out, and from 40, she jumps up to 48. So this is where she is now. Let's isolate this right here. She's in the $40 range, which is a 100% increase from the beginning of the year. Now, this is great for those people who bought it at the beginning of the year and just holding on to it. But there always has to be an exit strategy. Okay, you bought it at $20. Now she's at $40. The other day, she jumps up to 50. Okay, now she's at $50. What are you gonna do? You gonna hold on to it? Totally up to you. So she has a good earnings a couple of days ago, and for some strange reason, she jumps from 39 and she goes up to 48. It's almost a $10 increase. Okay, she opens up at 43, hits a high of 48, and closes right around 47.90, somewhere in that area. Tuesday, she opens up at 47, closes at 48. Okay, nice again. Yesterday, she opened up at 48 and closed at 54. Nice move. Today, however, she opens up at 50.24, down a little bit from yesterday. Why is that? I don't know. What's the market maker know that nobody else knows? I mean, you're on a roll. You jump $10 in a day. Okay, next day it's an up day. Next day it's an up day. Today is a down day. Why is that? Look at the volume. Monday, the volume is 3 times that of what it was on Friday. Almost 4 times what it was on Thursday, Wednesday, Tuesday, and Monday from last week. The volume is relatively not that high for this company. Look at it. But Monday, for some strange reason, the volume is way up there. Why? Could it be because of the earnings and everybody's jumping in or jumping out, taking profits? Who knows? Do you really want to know? I don't know. I don't care, to be totally honest with you. I really don't. All right. So this thing jumped from 39. Now she's up at 49. Okay, nice $10 move. Now, from what I understand, the dividend is coming in the next 7 days. Okay, not next week, but the week after. Okay, great. Is it going to be able to sustain this kind of area, which it's never seen before? Okay, this is an all-time high. The all-time high for this company is 50.65. That's the all-time high. Is it going to go any higher? Who knows? Can the company sustain this price point? And do I want to invest my money in this in order to collect the dividend that they're offering? Really don't know. For me, I'm going to say no. And there's a reason why I'm going to say no. I don't want to stand on a ladder reaching for the stars. What does that mean? We're at an all-time high. This is territory the stock has never seen before. Can it stay the course? I mean, can this be the new norm for this company? I don't know. Okay, so let's take a look at a few other things. Okay, so let's say, hypothetically, we do want to buy this. Now, what strategy do we want to use? Do we want to buy the stock, collect the dividend, and get rid of it? Oh, heck no. Do you know why? Because the stock has never seen 51. All right? If I'm going to buy it, I'm going to want to buy it with the possibility of it going up. It's never, ever seen $51. Yet, she's at $48.96. It's about 49. The high was yesterday at $50.65. That's the high. It's the highest this company has ever seen. Can it go up higher? Yes, it can. Can it go down lower? Sure, why not? Can it stay the same? Huh, of course. It can do basically anything it wants to do. That's basically what stocks do. They go up, they go down, they go sideways. No, there's no other direction it can go. Up, down, sideways. That's it. Okay, so am I going to take the chance, my money, putting it on the line for this thing to hit 51? Nope. Let's take a look at seasonality, find out what this thing normally does over the last 10 years. Oh, nice time for the computer to freeze up. All right, so, here we go. All right, seasonality is telling me nothing at the moment. All right. This is what the stock normally does. Here's the blue line of what the stock is doing this year. Starts out the year at 23, go down a little bit, up a little bit. It's kind of like a what do you call it? A channel, anywhere between $19 and $23. And it goes this way about 4 months. For some strange reason, from beginning of May, she shoots up from 23 all the way up to 50. Why? Don't know. All right, so let's isolate this small little space here, find out what this thing's going to do hypothetically over the next couple of weeks. Here's where she is now. What does it normally do this time of year? Absolutely nothing. Look at that line. It's about flat as a pancake. Okay? So is there any room for going up? No, because it doesn't normally go up this time of year. I mean, they have their earnings every year at the same time. Year after year after year. They pay out the dividend 4 times a year. We're going to get into that in a little bit. We're going to go a little bit more research. Because I'm not just going to tell you no. I'm going to give you other reasons why. Okay. So seasonality is telling me it's not going up. Okay. It's just going sideways for the next couple of weeks. Do I want to invest in it? No. I said that again. Okay. With that being said, let's jump on over to trade and see what kind of cash they're offering. Okay, here's PETS. The bid's 45, the ask is 48, almost 49. And as you can see, it only offers monthly options. So I got 23 days. 23 days, that's a whole month before I'm going to see anything. Okay, why don't they have a July option? Oh, that's already came and went. So 23 days, the whole month before the option expires. So I can do a covered call. Let's see what the covered call looks like. Okay, she's at 49. So if I buy the, it doesn't even offer $1 increments. It only offers $5 increments. So if I buy the $45, I'm paying $4.60. I can sell it for $4.60, which is, you add the 460 to the 45, and you got 49.60. So here's where she gets confusing. How much money am I going to make off of this? Okay, I buy the stock for 49, just about 49, because it's 48.96, and I sell someone the right to buy it from me at 45. Okay, I'm buying it for 49 and somebody is buying it from me at 45. So I'm losing $4. Now, for the privilege of buying it from me at 45, I'm collecting, look at that, $4.10. So, if you add the $4.10 to the 45, that means the other person is buying it from me at $49.10. So, you subtract the $4.10 from 49, I'm at 48.96. That means I'm making a whopping 14 cents. That's not worth my time and effort for a covered call. That's a terrible, for 22 days, that's a terrible return, in my humble opinion. Okay, other people may say, hey, I can deal with that return if it's guaranteed. Is it guaranteed? No, nothing's guaranteed in the stock market. Oh, wait a minute. Yes, it is. I'll give you a guarantee in the stock market. Stocks go up, stocks go down, and stocks go sideways. There's your guarantee. Okay. Had to rant a little bit. Sorry about that. So pets, numbers aren't working for me. Hey, as a covered call? No, sorry, not working. Now, let's try a spread. A vertical spread. Now, the only one I'd think of doing would be this one, the 40-45. Because if I do the 45-50, then the stock has to move up. There's no making money if it goes sideways, no making money if it goes down. So do I want to do that? No, I don't. So if I'm going to do the 40-45, it's going to cost me $4.83. So I'm making 17 cents for each option that I buy. So if I do 50, because I like doing increments of 50, what am I going to be making off that? All right. I'm making $850. Okay, cool. But I'm investing $24,231 to make $850. And I'm tying up my money for 22 days. That's a month. The trading month. No, thank you. That's not enough return. Okay. So, PETS is out of the question for debit spread. It's out of the question for a covered call. Do I want to collect a dividend and take the chance of doing that? No, because she's at an all-time high now. Is she going to go higher? May not. Is there a guarantee in that? No, there isn't. There are other companies that have better option plays and better returns on investment than this one. Let's do a little bit more research. All right, here's PETS. All right. She previously closed at 50.51. The market cap is 993 million. Okay. Today's range. Okay, don't need to know that. Okay. Check this out, the 52-week range over the last year, from $18.90 to $50.90. That is a huge range. I have no comment on that one. That the range is just huge. Okay, the volume today was 1 million. The average volume is 600,000. Okay, that's less than a million. Why would you want to trade a stock that trades less than a million, especially for a long term? The dividend is 80 cents. That's a nice dividend. However, look at the yield, 1.6%. So if you're going to buy this stock and hold on to it, you're only getting 1.6% return on your money. A CD is paying 1.5% right now, or 1.2%, somewhere in that area. A CD is a lot better off than a stock because it's guaranteed. A stock is not guaranteed whatsoever. If you want 1.6, fine, do it. But I wouldn't. Okay. Here's another good one. The 1-year target estimate. This is analyst target, the estimate, what they think this thing's going to do in the next year. They think it's going to be $40.75. I'm buying it at 50, okay, because right now that's where she is. She's at 48. Today's close was at 48.96. So I'm buying it at 48.96, and she has a 1-year target of 40. That's a 20% decrease, or is it? Yeah, that's a 20%, almost a 20% decrease for 1 year. Why would I do that? Okay, that being said, fine, dandy. One more thing to look at. Historical pricing. Okay, what I want to see is dividends only. And I want to go back as far as I possibly can. Let's go back to 1990. Okay, that's not working quite right. Give that a minute to populate. Let's see what it looks like. All right. We're looking from July 27th, 2000 to July 27th, 2017. So we're looking at 17 years worth of data. All right, this pays its dividend in February, May, August, November. All right, 20 cents, 19, 18, 17, 15. Let's go down a little bit further. 15, 12 and a half, 10. Oh, look at that. The thing's only been paying dividends since 2009. That's not even 10 years worth of dividend payments. I don't like to invest in companies unless they have at least 10 years worth of historical dividend payments. It means they're paying consistently and consistently increasing. Now this company is increasing their dividends every year. Hey, great. Every quarter they pay more. Or every year. Look. 10 cents, 10 cents, 10 cents, and it jumps up to 12, 12, 12, 12, 12, then up to 15, then up to 17. Hey, great, they're moving up all the time. That's wonderful. However, look, back in 1999, you could have bought this stock for $6.88. Now she's at 48. But look, there's a very, very slow growth from 1999 right up to this year. She was at 20. Okay? So 8 to 20. Now, she's at 48. This is no good logical reason. Can the company sustain it? That's all I'm saying. Can they? Who knows? I don't think so. So, my suggestion is no. I'm not going to do it. Let's see if we have any questions on that one. Interesting. Okay, so it's broadcasting at the moment, but why doesn't this show that's broadcasting? What are we doing? There we go. Okay, we're still streaming. That works. All right, with that being said, that's why we're not going to do that's why I'm not going to do PETS. Somebody asked me what I thought about PETS. There you have it. Hey, if you owned it last Friday and you're here today, $10 increase, that's a 25%. I mean, that's a 30% increase in one day. Okay? Take the profit, don't take the profit. Totally up to you. Who knows what's going to happen tomorrow or the next day? This may just be an anomaly. She may drop right back down to the $40 trading range. Who knows? But as for me, Ain't worth my time and effort. All right. Let's jump over to the other one and see what we did yesterday or this morning. Now, we did take a look at a bunch of companies yesterday to find out who looked good for today. Now, we couldn't do any option plays because we were basically out of money in our option account, but we did have about $40,000 in our dividend investing account. So what we did, we ended up buying Walmart and Schwab. Okay, 500 shares of Walmart, 1,000 shares of Schwab, both roughly around $20,000 a piece. We're going to see what that's doing. Okay, so Walmart. Come on, a little bit slow. I love when the computer slows down. I mean, you have it on all day, and there's just so much crap runs in the background. I should probably clean it out and do it fresh first thing in the morning or before I go on. All right, this is not helping out any. All right, with that being said, we got into Walmart first thing this morning at $78.65. And we got a target of 80.62, and she's at 79.75. So I could take the $550 profit and say thank you very much, jump ship, or I can just wait it out, let the program do what it's supposed to do. You know, set it, forget it, then notify me when it's done. That kind of scenario, which is probably what I'm going to end up doing. All right, well, that was Walmart. We got that one, 500 shares. And, what was that? Some strange reason that one closed. Oh, let's log in again and find out what's going on. Why is this one slow? All right, CL. What did CL do today? $145. All right, so CL, we got to take a look at that one tomorrow because we did sell a 74 option. So if it goes above 74 tomorrow, someone will be buying me out. Doesn't look like that's going to happen because we're at 72.95. She could go up $1 tomorrow. That would be nice. $1.05. You know, get out of this one because it is tying up quite a bit of my money. Can't really do anything without it. Let's see how much money we have to play with. This is how I do it. I usually go here, buy an astronomical amount, just so they can tell me no. Okay. It's going to cost me, what, $500,000 to do this trade? I'm not going to do it. I'm just going to send it so they can tell me how much money I actually have to work with. Order confirmation dialog. it's thinking, all right, see, I don't have actually any money to trade in this account, so let's get out of this one. And let's log into the other trading account. All right, while that one's loading, okay, see what else we're looking at. So I can't believe I have no questions whatsoever. Yeah, Dan Zimmerman wanted to know about PetMed. All right, that's that. Let's go back and see if this thing loaded. It's still analyzing. Lovely. Performance problem. Love performance. Okay, so who are we looking at today? Let's jump in and see who we're going to look at today. Okay. Ooh, ExxonMobil. Let's take a look at them. They're offering a 77-cent dividend. XOM. And see what ExxonMobil looks like. See if it's worth. Oh, that's not good. Okay, ExxonMobil starts out the year at 91, quickly drops down to the $87 area, trades sideways between 82 and 87 for about half the year, makes a high all the way up to 93. Then from 93 back in December, slowly makes its way down to a trading range of 81. It's not a huge move from 93 to 81. That's not that big of a move, like 10% or 12%, something like that. So she's been trading the 81 area for the last 6 months, and now she's at $80.83. So let's find out what ExxonMobil has to offer. Waiting for data. All right. This is going to be a one-day trade. See what she's offering us for a one-day trade. She's at 80.81. So this is the one we're looking at right here. 80.50. See the 80.50. Ooh, now this, my friends, looks like a good trade for tomorrow. How much can you make investing for one day? Let's quickly take a look. 50 contracts. Okay, the most we can make is $750. Our break even is $80.35, which is way down here. So I don't know. It's a possibility. Okay. So 750. I'll bring my calculator for that one. quickly give you an indication of what kind of return that is. How much was that exactly? $18.31. So $750, $18.31 or $18.32. Oh, my computer's running slow. Isn't that lovely? $750. That's our maximum profit. Our investment, $18.32. All right, so it's 40%. Now, this is a 40% trade for 1 day. One thing I love about that, number one, ExxonMobil, awesome company. Let's take a look at the 10-year chart on ExxonMobil. Oh, right here. That's what I want. Here we go. Oh. XOM. And XOM, and hit the enter button. What are we looking at? All right. Here's where we are at the moment. ExxonMobil was up today, up 46 cents. Lovely. Wonderful. Okay, previous close, blah, 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 blah. Average volume, 11 million shares. Gotta love that. She's at 80.83. She's got a 1-year target of $83. So that's going to go up. All right. Not definite going to go up. Is a good possibility that it's going to go up. Okay. That's what the analysts are saying. What analysts? Who are they? What's their track record? I don't know. You want to find out? Do your research. Okay, the year's range is 79.93. That's a nice tight range. It's about $20. That's pretty good. Not like pets. Pets is a huge range. All right. Earnings per share. Gotta like that. And here's your dividend. This is lovely. Look at $3.08 or 3.84% for a dividend for ExxonMobil. ExxonMobil's a huge company. Huge, global, freaking enormous. Okay. So they're offering 3.8%. That's triple what Pets was offering. Pet meds. Don't get me wrong. I mean, I love pets. I love the idea of getting your pet medicine through the mail or online. Great, making life easier. I'm not a big fan of the big oil conglomerations, but we're not talking oil. We're not talking pets. We're talking cash flow. Money coming in, money going out. These guys have great volume. Okay, 11 million volume today. The average is 11 million. It's right on target. Okay, the days range, a nice tight range. Look at that, 79.90 and 80.88. That's a tight range. And the 52-week range, again, $80, $93. That's a tight range also. It's like a $13 spread on a $90 stock, on $80 stock. All right, great. She's not at the high of the year. She's not at the low of the year. She's somewhere in the middle. I like it somewhere in the middle. Not looking to get new highs. Okay, the high for the year is 93. Right now, she's at 80. There's plenty of room for growing. Okay. I like the dividend. It's $3, and it's a 3.8% return. 3 times what you're going to get on a CD from a bank. Okay, so that's great. So let's jump in and take a little bit more, a deeper look. Why isn't she opening up? Okay. That's lovely. Not quite what I'm looking for. There it is. Took long enough. Okay, so here where we are. Yeah, it seems like it's in a downtrend, but it's an oil gas stock, you know. So here's the trade as it sits at the moment. Buy however many contracts you want. I like to do 50 because it makes it worth my while. Because 50 contracts is only costing me $1,800, $1,831. The bad side about that is if I get stuck with it, that's 5,000 shares. But I'm not. I'm going to pay attention to it tomorrow afternoon, right around 3:30. I'm going to take a look at what the position's going to be. That way I can jump on out of it. But a 40% return for one day. You get it first thing in the morning, right? You put the order in tonight, first thing in the morning, you're out of there with a 40% return as long as the stock stays above $80.50. Okay, she's at $80.83 right now. So what does that mean? Point blank, and I want you to pay attention very closely, okay? ExxonMobil, big company, great dividend, great return. This option play right here, if the stock goes up, you make you 40%. If the stock goes nowhere and stays the same, you make you 40%. If the stock goes down, she can go down, what's that, 33 cents, and you still make you 40%. Okay, you can go down as far as $80.50. As long as she stays above $80.50, you make you 40%. Now, the nice thing about ExxonMobil, 10 days they're paying out their dividend. What normally happens when the dividend's getting ready to go? Investors come out of the woodwork and they buy companies just to collect the dividend. And ExxonMobil's a good company. So, that being said, ExxonMobil's my tip of the day. Okay, so ExxonMobil gets you 40% for one day. It's not out, you're not holding it for a year, you're not holding it for a month, you're holding it for one day. And that I got to share with other people. So, that being said, I think I'm done for the day. See if any questions arise. No questions. Tip of the day. Gotta love it. All right. Back to where I was. All right. Let's beat feet. I love it when the computer hangs out, because then I'm stuck here looking like an idiot. Not going anywhere. All right, that being said, this is James from Dividend Stock Talk. We will catch you next time around. It will be tomorrow at 3:30. We're not going to do one tomorrow night, because Fridays we only do them at 3:30 in the afternoon. So, we will catch you at 3:30 tomorrow. Find out where those positions stand. We got Walmart to look at. We got ExxonMobil to look at. We got Charles Schwab to look at. And, of course, we have Colgate-Palmolive. Don't get me wrong, I like getting the 1 or 2% per week from Colgate-Palmolive, but I missed out on that 40% trade today because my money's all tied up with Colgate-Palmolive. All right, so we're done. We will catch you